The topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome to Tax Talk for You. It's a great way to start out Monday morning. Just got back from speaking at Truck to Success seminar for truckers, especially those getting out from being W-2 drivers to going out owner-operator. You can see OIDA had their 50th anniversary, got this real nice hat. Really enjoyed it. So welcome to all of our truckers out there. We're going to be talking today, probably one of the worst subjects that we have heading into holiday season and everything is owing the IRS. Now, can you just imagine how life can be when you actually have tax debt that the IRS is trying to collect? I mean, owing IRS money is stressful. It's frightening. I mean, you get all these letters and demands for payments. You get reminders consistently of what you owe, the threat of levies, the threat of liens, wage garnishments, or, just taking the money out of your account when you don't expect it or you just got paid. Now, what can be worse than that? I mean, there's really not much worse than having the IRS take every dime that you had in your bank account when you least expected. I know they sent you the notice and you've ignored it, or maybe you didn't open it, or maybe it's been months since they sent you that notice and they didn't take any action, and all of a sudden they take it out of the blue because now they can, because they sent you that final notice of intent to levy, and now they can levy that bank account. Yeah, we're coming up, at the first of the month, and all of a sudden you got paid and you needed to pay your rent, you needed to pay your mortgage, you needed to make your car payment, utility bills, you name it. You've got to pay the groceries, and now there's nothing in there. Your account was frozen. The bank took everything out of there to pay it to that god-awful IRS. I mean, it is true. The Internal Revenue Service has lots of power. I consider it to be one of the most powerful collection agencies in the world. This country survives off tax dollars collected from every single American, and you're no different. They're going to come after you and collect the money that you owe. And a lot of times it's just to get your attention. So now you're going to pay attention to the dollars that you owe the IRS, and you're going to pay attention to what's happening in your bank account. Maybe that'll make you pick up the phone and call the IRS, or maybe that'll pick up the phone and call our sponsor, Taxation Solutions Tax Relief, and get our attention on helping you stop the IRS from these collections. And then what can I do? What can you do once you have this money due to the IRS? You do have options. And not every option is exactly, hey, full pay. Of course, if you full pay it and you got the wherewithal to do it, they will gladly take every dime you have to pay your tax debt. Gladly. I mean, they're going to be happy. You call them up, you dial their phone number, and they say, hey, how much do you have? Okay, give it to us. You can go online and go to irs.gov payments and pay the full amount in. or you can send them a check. They'll gladly take everything you got. They'll gladly take whatever you're going to give them. If you tell them you've got 5,000, 10,000 in your bank, hey, send it to us. That's what they're going to want. They can offer to put you on a payment plan. Hey, if you owe them 10,000, 20, 50,000, they'll set you up on a payment plan to full pay and allow you to pay it over the time left in the statute of limitations. So the statute of limitations from when you file and accepted the return is 10 years. Once 10 years is there, that debt will go away. So if you made it 10 years, all that debt will go away. So the couple of things here. So when you owe the IRS, the first thing the IRS is going to want to make sure you do is not going to be incurring additional tax debt going forward. All right. Well, that was interesting. So obviously we were having internet problems, and I think we're back. So, well, like I said, the first thing the IRS is going to want you to do is make sure you're not incurring any more tax debt. So they're going to be looking at estimated tax payments and making sure you're making them for 2024. So those, when you're filing, after you file your taxes, you got to make sure you catch up with them. If you're working on doing some kind of resolution with the IRS, they're going to want you to catch up with all the estimated tax payments for the year so that you're not incurring additional tax debt. Those estimated tax payments are made usually April 15th, June 15th, September 15th, and January 15th. Don't seem like quarters, true quarters, but they're the IRS quarters that they work with. So you always want to make sure you're making those estimated tax payments. Now, as you're working through this with the IRS and you've made those estimated tax payments or you caught them up, the IRS is going to be glad to work with you to set you up on a payment plan. So the first payment plan that they're going to offer you is that full pay. So you're going to be able to pay the full amount to the IRS over a period of time. So that can run as long as about 84 months. They'll set it up to be direct debit so that every single month on whatever day of the month you choose, they will start processing payments for you. And they prefer it to be direct debit. If you're doing this yourself and you can full pay, again, you can go to irs.gov payments and set up that payment plan. And like I said, that payment plan is going to be absolutely full pay for you, and you'll continue to pay interest and any penalties that they can continue to accrue while you're on this payment plan. So interest these days isn't cheap. As you know, interest rates have gone up, so have the IRS interest rates. So you'll continue to pay on that debt and continue to accumulate interest as you go. If you're trying to set up the payment plan, you do it over the phone. It's going to be $225 fee. If you go to the IRS.gov, it's only going to be $130 fee. And then, you can also, if you're going to come into money, you can also set it up on a 180-day full pay. And then after 180 days, basically half a year, you can pay them off, or you can actually set them up on a payment plan at that point too. So they give you a few options out there to get them as much money as you possibly can. And that's what their goal is, again, is to get as much money to the IRS as possible through whichever means the IRS has. Now, if you are low income and setting this up, you can also get the low income fee of $43. And so the IRS will set you up on that as well. Now, there are a lot of other options out there for you. And you can explore those options, and we're going to explore those options throughout this program on how you can actually set this up to maybe pay less than what you owe. And how are you going to go about doing that for you within the program of the IRS? We're going to take a quick break, and then we're going to talk about partial pay installment agreements right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We got a quick message here, question online, and one of our trucking friends, which is fantastic, from the truck show. When we were talking about trucker bookkeeping, trucker taxes, we also talked about business entities and how business entities could save you money on your taxes, and how we use them to save money on taxes as well. And then we talk about lease purchase of your truck. So, we talk about many different things when we're at these truck shows. One of the things we kind of hustled through, because we were on limited time at the Truck to Success show, was one of our bonus programs that we run in there is fighting the IRS and saving tax money. And the question does the IRS offer this Fresh Start program? Well, we always hear this on the radio, and that is a program the IRS offers to you, the taxpayer that owes the IRS money, is the Fresh Start, or as I like to put it, is the Fresh Money program. Fresh money into the IRS, because it's freshly from you, the person that owes it and hasn't paid it over a year, 2, 10, whatever the number of years that you've been owing the IRS, and it's fresh money to them. There's all different facets of that program. It's not a program that any of the resolution companies set up. It's actually a program within the IRS to collect money as fast as possible. Now, it does offer, many options. Of course, the full pay, partial pay that we're going to talk about right now. offer and compromise, non-collectible status, and then the two different types of offers and compromise out there as well. That's available to you as a taxpayer that owes the IRS money. But getting into partial pay installment agreements, this is when you make monthly payments until the tax liability expires without paying the whole balance. And this results in the IRS settling the remaining amount or writing it off as the CSETs come in. So what's a CSET? CSET is the statute of limitations that the IRS has to collect your tax liability. Now, if you're listening to this program and you go to taxationsolutions.net and you put in for the free consultation, or you give us the phone call here at 888-930-1016, we will sit down and do a tax analysis. Now, a tax analysis is going to tell you several things. One, we pull the whole record that the IRS has on you. So it tells us all the letters that were sent out, all the collection activity that was done, how much you owe, what tax returns you hadn't filed, how you filed those returns. We're going to get more detailed records of every collection activity they've taken against you so we can determine the right program. And once we've done that, we also do a complete analysis of every tax year that you owe for. Now, if you filed timely, your 2014 tax debt, that would still have about one more year before it would fall off. So if you filed April 15th or before, we're less than 6 to 8 months away. If you filed 2013 taxes and you filed at the end of or in October, that debt would have fallen off this year. So it's 10 years from when you file. And so we look at that. What are the CSETs? What is the statute of limitation on all of your tax debt? And then we develop a program for you. Now, when we're developing that program, so we developed that program to look at every one of those CSETs. So how are we going to save you money? What's going to be the most cost-effective way for you to get rid of the tax debt and be able to control the IRS and their collections and prevent them from getting dollars that you shouldn't have to pay, or maybe prevent you from paying those dollars. So we took a client and they owed about $32,000, and that tax debt was going to expire in about 5 years. Some of it may be falling off in 4 years and stuff. We put them on a payment plan that they could afford of about $200 a month. And, they approved that plan. That's going to be about $12,000. So now you can see the IRS will write off the other $20,000 at the end of those 5 years. We've taken other people who we've looked at their statute of limitations and the CSEDs and said, hey, you have debt falling off in a year, some debt falling off in 2 years, 3 years, and then you've got debt that's going to be out there for 10. You can only afford to pay, let's say, $100 a month. We prove that to the IRS and put you on a payment plan of $100. That first year, we get debt falling off. The second year, more. Third year, even more. And it puts a lot of savings in your pocket today because that debt falls off. Now, the other debt that's going to be out there for, current debt for 8, 9, 10 years, yes, you're probably going to pay it all off over that period of time, even at $100 a month, depending on how much you owe. But it becomes a real nice program because it's going to save you money without going through the huge hassle of going through, let's say, the offer and compromise. And if you don't stay in compliance with the IRS, maybe you don't file on time, maybe you incur more debt. One of the issues with the offer and compromise is that once you're not in compliance, all the debt comes flowing back and the statute of limitations were put on hold. So your statute of limitations will pick up again once you fail file everything timely. So sometimes this is the right program based on your compliance history and based on how you can stay in compliance as well throughout the term of this partial pay installment agreement. So, we have to look at everything because, let's just say you have a tough time staying in compliance. It could be cash flow. It could be just filing. It could be that you can't keep up with the bookkeeping and you don't hire somebody to do the bookkeeping for you. Those things can become issues for you as you go on. So if we set up the partial pay installment agreement and some of the debt goes off in the first 12 months and you're good with compliance, and maybe some of the debt goes off in the second 12 months and then you fail, your statute of limitations did not stop. It kept running. So let's say you failed during that second year and we work to put you back into a partial pay installment agreement. While we're working on it, maybe that statute of limitations runs out on that second year and you've still accomplished a huge savings by that debt being written off by the IRS. And maybe at that point, we need to look at an offering compromise and you decide to work with us to stay in compliance as you go, continually going forward. Because sometimes that's really the hard part of it, staying in compliance. And when we talk about staying in compliance, it's multifaceted. Staying in compliance is filing on time. Okay, so you do get the option to file that extension, but you got to file on time. You got to make your estimated tax payments timely. And then if it's projected where you're going to owe when you file, making sure you pay the rest of the balance due on or before April 15th of that year. Just because you file an extension does not give you an extension of time to file. An extension of time to pay gives you only an extension of time to file. Again, let's repeat that. It does not give you an extension of time to pay. It only gives you an extension of time to file when you file that extension. So keep those things in mind. And that's where the IRS is going to look at compliance. Now, it may take them a little bit of time. So the good news is, hey, you may have fallen out of compliance, but that tax debt may fall off within the next 6 months of filing. So we go to file your 2024 tax return on April of 2025. But within 6 months, another year's of debt's going to fall off. So we file the extension. And even if you're not in compliance, that debt would fall off when you're in that partial pay installment agreement. And you've accomplished eliminating some debt. And then we file the tax return. You added more debt. You fall out of compliance. You lose the partial pay installment agreement. Maybe we come back and do it again. But it gets harder and harder the more times you fall out of compliance to get them to agree to this same kind of partial pay installment agreement. So you need to really work hard if we were to put you in this or you get yourself into it to stay in compliance. Now we're going to take a quick break. And when we come back, we're going to start talking about currently non-collectible status and how you can use that to your advantage as well.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. I really love getting text messages and people asking if you want to join the show. You're more than happy to call in. We'll put you on there and talk to you and answer your questions as we go as well. But I had Dale out in Atlanta, Georgia, asking about does this apply to business and business taxes? Businesses and business taxes can be handled with a payment plan. You can also handle them sometimes and offer a compromise. We'll get into some of that as we go. One thing about business taxes, a lot of times, unless you're an 1120 as C Corp, the taxes you are going to be owing are predominantly payroll taxes. And with payroll taxes, they have a whole different collection philosophy because that was not your money. Part of that money is considered to be trust fund taxes, meaning money you pulled out of your employees' payroll and you failed to pay that in. And part of it is the company taxes. So they have completely different enforcement collections when they're dealing with payroll tax issues. And so not knowing exactly what your issue is with that, feel free to give our office a call and talk to us. And we'll kind of talk about, what we can do to help you with your business taxes, if that's what you're owing, and how we can possibly save you money going through that. We've had very good results in working with companies. So just give us a call at 888-930-1016. And, we'll figure out a way that how we can help you resolve that issue. Now, in talking about, non-collectible. So what does non-collectible mean? It means the IRS deems that you don't have the money whatsoever to make any payments to the IRS, and they will put you in the status of currently non-collectible. This is a hardship status. And it's a lifeline for individuals, sole proprietorships, partnerships, limited liability companies, S corps that are unable to afford, the tax bill. So yes, it is available to everybody. Again, remember, payroll is a lot different in these things too. Most partnerships and LLCs, depending on how you're taxed, it's going to fall to your personal tax return for those taxes. Even if they're coming after and saying, hey, we're going to collect against the company as well. But currently non-collectible, or CNC, as we do, is a necessity to have out there as a step for those struggling, with financial distress. It's going to give you a temporary cessation of collections. Now, this could stay permanent for you, but the IRS considers this to be temporary. So it's going to hold out there for about 2 years. And then the IRS may come back to you and ask you to show your income again. Or the IRS is going to look at your current tax return and see that, hey, you've been here and now your income is up here. So your income increased. So therefore they feel like you can then pay them. Or you don't file timely, or you fall out of compliance, estimated tax payments, not filing, not making the payment on or before April 15th. All things that can result in you getting kicked out of non-collectible status. So, If you're wrestling with making ends meet, you don't have a lot of income coming in, maybe you're just on Social Security, or maybe just on teacher retirement or some kind of other pension plan, whatever it is that you're on, and you don't have the ability to make ends meet, according to the IRS, not according to you all the time, the IRS will offer the non-collectible status to you. So, you can take advantage of that. And especially, again, if we're close to CSEDs, as CSEDs come in, there is no stopping of statute of limitations from running. So as time goes by, debt will fall off based on the statute of limitations. So, we can use that as a gap or to bridge getting some of the tax debt to go away. And if the income's not changing, it's a beautiful thing. If your income's going to change, then maybe we default back to that partial pay installment agreement. Or maybe we default to what we're going to talk about right now, offers in compromise. So we all hear this. Offer in compromise, settling your tax debt. Some of these places have talked about pennies on the dollar. Everybody qualifies. No, everybody does not qualify for offer in compromise. But let's first, what is an offer in compromise? That's when you file with the IRS Form 656 with the 433A and 433B if you're in business. And, basically you're asking the IRS to settle for some amount of money on all the tax debt that you owe the IRS. Now, does the IRS accept these right off the bat? No, these are going to take about a year to process. Now, sometimes it's 10 months. I've had them go 18 months. Sometimes it's faster. It all depends on, the IRS. And it's a waiting game at that point. Now, the one thing to remember, statute of limitations stop as soon as you file that offer in compromise. And it will stay in limbo throughout the whole offer in compromise process. So if your offer in compromise is accepted, it will continue to hold the statute of limitations for a full 5 years after the offer is accepted. So that could be, 6 years, could be 7 years for them to process the offer, and then the following 5 years from there. Now, what you're going to offer them is basically what you can afford to pay the IRS. Now, there's stringent rules and regulations to this offer and compromise. It isn't, hey, this is what I have expenses going out, and this is my income coming in. It is everything. So they're going to look at what you make, what assets you have, stocks, bonds, house, the equity in your house. They're going to be looking at everything and everything you own. Now, if in the last year or two you sold off a car, they're going to know it. They're going to ask where this was. Where did the money go? If you gave a car to one of your children, they're going to want to know. They're going to ask the questions. You have multiple cars that are titled in your name. They're going to ask about it. You have equity in them. They're going to be looking for that equity that's in that. They're going to be looking at what you did. If you pulled money out of your 401k, IRA, where did that money go? That's considered to be possibly a dissipated asset. And they're going to be looking for that money unless we can show that you had to use it for living expenses or major repairs. What did you do with that money? A lot of our friends and people we have helped over the years, and we got into the trucking business, have been owner operators and truckers out there because they didn't make estimated tax payments and then you didn't file. So why did you end up owing this money? And they look at that as well. Those are the questions they ask us when we're representing you. The IRS is going to check and analyze your tax returns, your current financial records. and statements to determine whether or not you're going to qualify for this offer in compromise. They're going to be looking at your bank statements. They get the last 3 to 6 months of bank statements, and they're looking to make sure that, when we file the 433s, the 433s is the financial roadmap to everything you have and everything you own. Everything's got to be on there. So you got to remember, this is the largest, biggest, baddest collection agency in the world. And you think they can't find something, they will find it. Now, the funny story behind this is that the IRS found assets for a client we filed an offer in compromise for. And I'm going to tell you a little bit of that story and how that worked out for this client, thinking they were hiding assets from the IRS, and how the IRS found these assets and how it impacted them when they were going for this settlement and offer in compromise. And we're going to talk about that. Hey, right after this, we're going to take a short break, and we'll be back talking about how the IRS finds the things you think you hid. We'll be right back after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, right before the short break there, we were talking about how the IRS checks your records and finds things that you have. The interesting story, we were working with husband and wife, and the husband really wasn't forthcoming with all the information. Now, we go in and ask for all the detailed information. You fill out a worksheet for us. We go over this worksheet. We ask for everything you own. So we put the right program together for you. Well, this guy thought he was smarter than the IRS. He had a lot of property that he owned, but he never gave it to us, never declared it, thinking the IRS wasn't going to worry about it. He also transferred property to his son so that he could try to avoid that being found. Well, the property he owned free and clear, and kind of try to disguise it in some of the property records and everything out there. Well, the IRS does a complete search of everything. Like I said, sometimes these searches amaze me, that they come back and find cars and vehicles people haven't owned for 3, 4, 5 years, but they didn't do anything with the car. It become salvage vehicle, and people didn't transfer titles or whatever it may be. And in this case, they found this huge property that he had. They also found that he had transferred property to his son within the last year or two. And now the IRS is coming back and saying, hey, you committed fraud because you didn't declare this on these 433s. And the taxpayer, our client, is responsible because we make everybody sign their 433 declaring this is true and correct. Now, we were able to prevent the fraud charges for them. We got them into an installment agreement so that they could settle their tax debt and pay it off. And we actually got them to pay most of it down by taking a loan against his property so that we could prevent any charges being against them in this case. So, you got to make sure that, hey, you're open and honest and letting us know everything that you've got going on, because if you don't tell us, we can't protect you. And that's what our job is when you hire Taxation Solutions Tax Relief, is to protect you and your assets to the best of our ability. But the only way we can do it is if you're talking to us and communicating and telling us these things. Now, just because you think you can't afford to pay the IRS, or you should get the settlement because you can't make ends meet. Now, the IRS has different requirements than you and I do. Okay. And those different requirements are going to be um, the national standards, what the IRS allows you to deduct for housing, utilities, your car, um, food, all those necessity items, they have national standards for. And you can't exceed deductibility for those national standards, even if your mortgage is $500 or $1,000 higher than the national standard. Now, they need to increase those standards because of increased interest rates and everything else to make these standards actually work across the country. But it all goes by what state you live in, what county you live in, and then the standard is set for where you live. And so once you can put those things in, then we can see, hey, do you qualify for this? Standards for an offer in compromise are much more stringently followed than they are for partial pay installment agreements or non-collectible status. So we've got to follow these national standards pretty strictly. The other problem we come into is equity in your house. So if you've owned your house for a period of time, you can see that your equity may sometimes exceed your tax debt. And then we've got to go after possibly trying to get a loan on the house or something, or you've got money in retirement accounts. The IRS is going to want you to see if you could pull the money from that retirement account. A lot of retirement accounts out there don't give you access to it. And we would need to see that in your retirement plan through your company to make sure that you cannot access that. And the IRS is going to want to see that proof. Then the IRS is going to look at what your offer is. Your offer can't be zero. I mean, we've done offers for $100. We've done them for $1,000. We've done them for $10,000, $20,000. We've even done offers for $100,000 on $1 million tax debt. We had to look at revamping people's financial situation to make things work. So what do we mean by that? Now, remember, you got to work with a tax pro when you do this, because if you're not working with Taxation Solutions Tax Relief and you're trying to do it on your own, not every one of these things apply to you. So make sure you're getting good advice from a tax pro, enrolled agent, CPA that does this on a daily basis, like we do at Taxation Solutions Tax Relief. You may need to go out and buy a newer used car, get a car payment instead of a car that's fully paid off. That could be money that you could be paying to the IRS, but we get it pulled out because now you have the car payment. So it's like the IRS paying for that car. Same thing we do sometimes in the partial pay installment agreements as well. We make sure you have all your taxes filed. Make sure you're making your estimated tax payments. Make sure if you're a business and trying to go through an offer in compromise, are you currently paying all your payroll taxes? Making sure those are there. You cannot be going through bankruptcy or have an open bankruptcy out there. And making sure you're making all your estimated tax payments, not just while the offer is pending, but continuing on year after year to make sure you're doing things right and staying in compliance. Now, again, offer in compromise is not right for every situation out there. Everybody's situation is different. So not only do you have to meet these strict eligibility requirements, and the IRS expects you to use all your available assets, including that equity in the home, they also expect you to stay in compliance for the next 5 years. Strict compliance with the tax law. Now, how strict are they? Well, I had a client come to me 4 years, 11 months, and failed to file their tax return. They had a beautiful offer in compromise. They had six-figure tax debt settled for $1,000, somewhere in there. And when they didn't file a tax return on time, didn't file the extension for the tax return, because this is what he would, if he would have filed the extension and made the payment, he would have been fine. He ended up filing 30 days late, forgot to file the extension, owed $5,000. The IRS returned his offer in compromise with the full amount of tax, the full statute of limitations that was left, and all penalties and interest that would have accumulated over those 5 years came flooding back. Now, what do? Can you go back in and file a new offer of compromise? Yes, if you qualify, you can. This guy happened to improve his life greatly and was making six figures. He could now afford to pay this tax debt. He could now afford to start making payments and had money in the bank so he could make a large down payment on this tax as well. Couldn't save him. Fell out of compliance. It was an accident, but the IRS doesn't care. They don't care at all. So we recommend you find a great program to make sure you're staying in compliance after your offer and compromise is done. Okay. Call us here at taxationsolutions.net, taxationsolutions.net, 888-930-1016. We offer you a free consultation. We want you to come in and call us. Let's talk about what's going on in your life with tax debt you have, and let us find a way to put a solution in place. Hey, we had some great trucking questions that came in while we were at the Truck to Success seminar. Before I go there, I want to say congratulations to Tom Wheatley. I've been working with him with OIDA Foundation for now maybe 7 to 10 years on the Truck to Success seminar that we do pretty much every year. I think we missed the COVID year. We may have done it Zoom and one other year in there, but it's been a fantastic program. If you're an owner operator and want to be out there, check out OIDA, Owner Operator Independent Drivers Association. Get into the foundation as well. They have some great webinars for you being in the trucking industry. But they were talking to me and saying, hey, can you do a settlement for truckers? Absolutely. If you're self-employed, got yourself in this debt, we work with you as well. Even if you are employed and maybe you pulled money out of a retirement account and you weren't aware of all the taxes that you were going to be doing, or you got laid off from your job and you had money that you had on loan from a 401k, and then it's considered to be a distribution, and now you owe taxes. We can work with you and solve those problems and those issues for you. It could be a partial pay installment agreement. It can be a non-collectible status. It can be offering compromise. But let's sit down and talk about it and figure out what's the right way to go for you. John over here in right here in Houston area. Yes, if you give us a call, we potentially could settle that tax debt. And if you owe $10,000 or more, we're more than happy and glad to help you. You look like you're owing about $7,500. Your taxes could be more than that. Let's talk about it. We might have a way and programs for you as well to help you settle that tax debt and resolve your tax issue. Resolving tax issues is what we do at taxationsolutions.net. Call us. Let us get started. We started Trucker Tax Tools because we were out there solving a lot of self-employed issues for owner operators out there. And we do this for everybody. So check us out at truckertaxtools.com as well. We do bookkeeping and taxes for you, and we're glad to help you. Hey, next week, send us an email. Let us address the questions that you have right here on Tax Talk for you. And let us get down to the nitty-gritty of taxes, bookkeeping, as an owner operator, as a independent contractor, as a self-employed. So tune in next week and join us at Tax Talk for You. Thanks for tuning in. We'll continue this conversation next week. Thanks again.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalkforyou.com. See you next week at W4CY.com.